I'm making sure we're live. We are live. I'm gonna do full screen on TikTok. I mean, I usually do, but I know on YouTube it's like a little less than full screen, but I'm gonna do a full screen because the TikTok chat, I was doing it not full screen to see the YouTube chat and the TikTok chat, but the YouTube chat just isn't as pumping as the TikTok chat, so I'm just gonna go full screen today on this. Okay, so today I want to talk about just the power of three in the hourly candles and the the hourly candle and the ICT macros, because that's what we've been trading. I just want to go back test the old school way of like seeing how often it played out during the week. So let's add the indicators. I can't do the power of three one because I think we can, but in real time it's this candle here that's printing, so I don't really know how to do it, but let's talk about it for those who want to use it. I've seen a lot of people on TikTok using it. I did save it, I think. Yes. Okay, higher time frame, power of three by 2 degrees. Okay, it is a indicator that prints that daily candle in real time as you are trading. So that works very nicely. However, I saw you can change it to make it like the hour or something, which is something I would rather do. I don't like trading on the daily because oh yeah, you can do it on the 1 hour. Okay, yeah, I don't like trading it on the daily because I trade only the morning New York session, and like, yes, there are times where, you know, London and Asian open above midnight and then go down in New York session the rest of the day. But a lot of times, like, let's see a day that happened. I think that happened on Wednesday. Okay, so Wednesday we have midnight open here. Let me turn off these fair value gaps. Midnight open here, this blue candle, right? And then we're open, well, it opened down here. It's a bullish candle. We went up. This is 7 o'clock. This is 8 o'clock. So we're above the midnight open before 8:30, and then we reverse the rest of the day, and then we come up a little bit. So this is a perfect power of three Judas swing ass day. And this was what, Wednesday? Yes. But a lot of days it does something like this, where it'll go down a little bit, it'll go up in my session, but it'll still make a higher. So like, this is a day where that candle, that indicator, wouldn't even do shit for you. You know what I'm saying? So it's not an everyday thing. I feel like even a day like this, we got, it's down candle. So midnight open, right? Everything happened before you got on the chart, and we're already running up before 8 o'clock. 8 o'clock candles here, and then we get on the charts here to technically, you know, go higher. But if you might have thought, oh, we should go down from here because now that we're above midnight open, we go lower, or I mean, whatever your bias is, if you have it, maybe that will help you sway this. But there's just days where it like zigzags like this that I just feel like I don't like doing this. But however, I want to catch this on the 10 a.m. candle is my goal. My goal is to catch a power of three. First of all, hold on. My candle would not be black. Let's just make it red at this point because I'm not going to use this. I'm going to take this off. But basically, this is the hour candle we have right now for Asian session. We open low. We're kind of going, I mean, we open high, we're going lower type thing. So you would want to catch, let's see if we can even look at it in real time since, okay, yeah. So you'd want to get in, where's the hour started? The hour started here, and we kind of went straight down after that. But you kind of want to get in on like this like market structure shift and then take the candle down if you think this is going to be a downward candle, is how you're supposed to do it. You know what I'm saying? And this is what I'm trying to catch on the 10 a.m. candle. I'm trying to catch the top. I'm trying to catch the wick if we think we're going down, the top wick. And I'm trying to catch the bottom wick if we think we're going up. And then you take the candle and you play it until, I guess on the 1 hour liquidity point would be here. So that's the trade. That's kind of candle range theory. And that's the trade. Something like this. And this is what you want to, this is what we're going to try to catch on our, I mean, if y'all want to take this trade, you can. It's looking good. Jeez. There's some people talking about I don't trade the Asian session. I mean, I don't. But basically, this is how you would use this, and then you can switch it to 4 hour. People use it on the 4 hour. You can switch it. I'm sure you can make it to match. You can make it match whatever time frame you're on, which would be nice too. But basically, yeah. But this is why I don't like stuff like this too, because this candle is not done. Like, it still can go. It can still turn to a blue candle. You know what I'm saying? I mean, we do got market structure shift. So it looks like we want to go down, but this candle can do whatever it wants in this hour. And an hour is a long time. So I just want to see how often this plays out on our macros. That's what we're going to back test today a little bit. Obviously on Wednesday it was beautiful. So I'm going to turn off this indicator because I don't really use it. There was another indicator I wanted to... Oh, yes. The ICT macros indicator. That is the one. Now, on the hour time frame, we're not going to use it, but when we get down to a smaller time frame, you'll see it. So, basically, I mean, we caught the one on Friday. We caught this candle on Friday. I almost got faked out by this long wick. I took a sell, and then I took a buy, and I did not hold it until here, which I could have. I just took it to like the top of the candle and then I got out. So let's go to the 1 minute. And then with this macros indicator on, it just shows you all the macros, which is basically like right before the hour. So this is what we got on Friday. I got in on this red fair value gap inverted. And I sold in the middle of this white candle going down. That was my trade. It was something like this. Something like that. That was my trade. But my stop loss was below this. It was like that. So I could have held, because it did not stop me out. And I could have held until it went up to these equal highs, which was my target. Because the market goes to equal highs strongly, and what did it do? It took all day, but it did go to equal highs, because equal highs are strong liquidity. It's like a magnet for the chart. So let's see. I wonder, can we go? I wish we can use this indicator for other days. Okay, this is midnight. Oh yeah, we can. Okay, yeah. As long as we can just see them all. And then it does it too, like, not this one, but it did it perfectly on Friday, where you could have entered buys at all of these macros. Okay, maybe not this one, but this one was a reversal that you could have took down to, I mean, it didn't really sweep it out. That's why I like either this one, the 950 1010 is a strong one, or the, I would say not, that's 30 minutes, which is mostly to 20. I would do 150 to 210, like beginning of the hour, because the 2 p.m. silver bullet. But I guess, I mean, it did reverse here to go down. So this was our liquidity sweep of our equal highs and all time, the hourly high. So this is a good sign of a reversal. The strong liquidity points, you're kind of hoping for a reversal from. These mini ones, you still will get reversals from them. See, it'll go sideways up and down, but it won't go like, this reversal wasn't the reversal to take out this liquidity. you wanted to take out a major one first before you wanted to reverse. And we haven't really fully reversed, but this, you could have took this trade down to here to sweep this liquidity right here if you wanted to, you know. But like I said, the move is not as big as the 950 1010 move. That's the one I prefer. Now on days where it's just running up all day, you still get one of these. So this is a loss I took where I got in on this inverted fair value gap. My bias was bearish, that's why. And then I had my take profit down here. And obviously I was up like $500-600 and I didn't close. I should have, especially once we got this fair value gap inverted. I should have just took, and I took this on live, so I think some people did follow me, but then closed out and played this to make money. But I was holding out, stop loss above this high, so I let it fully stop out. Even though there's an hour candle close, like right here, that I should have got out for a smaller loss. But this was the big trade of the day. So you still got a reversal. It was a continuation reversal, but it's still a reversal. So we have to get good at playing both. Like the reversal, that's an obvious reversal, or just one of these like continuation days. And this is one of those ones where on the hour, it looks like that was, what day was that? The hour always sends me back. That was, what day was, I think it was this day, because yeah, this big candle going down was what that faked me out, and then it went higher the rest of the day. But I feel like that was not that day, because I played this one very well. And then yeah, it was that day. This like long white candle kind of faked me out, but it's fine. And then we ran up the rest of the day. Okay, so that was that day. Let's look at another one. So you can use the indicator if you want. I obviously mark mine with just vertical lines like this to not distract me, but this indicator is cool. Okay, this was a day I also lost because we were chopping up in here. So I got in on an inversion down here, and then I over leveraged, so I got liquidated by this big stop loss. And we went down, I was up, we came back here, we traded sideways for a long time, came back, didn't stop me out because my stop loss was at the highs, but you know, I got in on like a 5-minute inverting fair value gap. Or no, it was a woman. I got in after the candle close of, I think it was this one. Yeah, so I got in way down here because look how long the candle closed. I got in way down here, and I over leveraged to make, you know, to get like full port my funded. And so this was a big loss, but my take profit was, don't piss me off. My take profit was so far down, and it went down. It waited to the next macro, obviously, the 11 o'clock one, and it ran down the rest of the day. And I had my take profit on, like, it was like an hourly low. It was such a beautiful trade, but that's why, like, when you full port, you have to make sure you factor in drawdown. And I didn't at that time, and I don't really care because it's a learning process when you do a full port and try to get funded fast. It's just a trial and error thing, so it's not something you learn. But yeah, see, it's a lot of choppiness. And then we came down, chopped, went back up, chopped, but we didn't sweep the highs. That's why I said the most prominent swing high is always your stop loss. That's why, like ICT, everyone's like, set stop loss. You don't have one, because sometimes you want to get in here now. You could have waited. I could have sworn my computer was plugged in. You could have waited for, which I think this other guy on TikTok did. He waited for like, he got in like here on this fair value gap. That was his trade. He got a good entry. Obviously still a big stop loss, but at this point we kind of got out of the mess. So your stop loss could have been like this candle or this candle. Honestly, usually you have it big, and then once we go down like this, then you move it a little tighter. And then yeah, the rest of the day, if I would have been liquidated, I would have got back in. That's why you have to like make sure you have your drawdown space for you to make at least an extra trade or two. So we did get a little reversal, but it was really sideways, but you could have got in and held, you know, up until these highs, or, you know, you could have just waited. I mean, you wouldn't have known though either, because we got this and then we ran down a little bit, so like it was going our way. We wouldn't know it was going to come up here. That's why you have to make sure you have good risk management all the time, because the days you want to risk more and it does this and you're right, you know, on a live account it doesn't matter, but on a funded account it does. Alrighty, let's go back. Will it let us use that indicator for more? It will not, but we'll just do like I do. I lied, actually. I think it is. It's just a different, I'm on the wrong time frame. I'm on the 1 minute, so all this is like midnight to 4 a.m. Okay. But see how you get like these like key reversals you can just trade to the downside. Here, you would have got stopped out on this one. You see what I'm saying? Like, this was one where like your swing high was, and this is kind of what I thought was going to happen that day I just showed y'all. It would have sucked to actually, like, see, you got stopped out just to get put back in the trade, which sucks. This really sucks. So you got in somewhere down here. However, there aren't any fair value gaps for you to really enter here. Let's see. I can turn on the indicator real quick. And it's not even, you're not going to show me? Is it too old? You scroll back too far? This is why backtesting this old way sucks, because you can't even really do everything you want to do. That's why I use FX replay. But there is a tiny one here. But you would have, so this is one of those scalps, and this is why the inverted fair value gap strategies on the 1 minute kind of work, because even though if your bias is bearish, this is a trade you could have took. We got it inverted, we're going up to those highs. And I mean, it kind of would have stopped. That's not a good risk to reward, actually. Some people take this, but if it's coming all the way down here to almost stop you out, I don't like that. I don't like that risk to reward. Here's a good one. This is one of those ones where, I mean, I don't trade in the afternoon, so this is, y'all, I think this is FOMC or something. No tap you in, even on the 1 minute, but we got that like almost continuation reversal where you want it like to come back a lot. Some people trade this to here, but you want to pull back a lot, retrace, and then you get it back on the downside. And for this entry, any candle close below this fair value gap, and then you're back in the trade, something like this. And then you could take it to these lows right here for a 1 to 4. You could take it to this next low. That's how liquidity, it's always going there for sure. You could take it to this low, and it went stupid down, and then it started to reverse for a 1 to 10. But like I said, I only trade the morning one. So what do we get in this morning one? We do get a reversal. How will we trade this? We do have one of those. This kind of was a little earlier. We have a regular market structure shift fair value gap. So right at the macro would be your entry for the gap. And this is one of those ones when it happens right at, that's why I get on that low at 9:45. So we would have seen this. And then with a nice tight stop loss, take it to this liquidity point right there for a nice 1 to 4 almost. And we do, so this is a regular market structure shift. If you don't know what that is, swing high broken to the upside, displacement, leaves the gap, taps back in, goes. However, I tried to trade, you know, the inversions now, but look, they line up perfectly with each other. So that's an extra, like, that's like 100% trade right there. An inversion that lines up with a regular FVG, and then you might have not gotten, you would have a worse entry though on the IFVG. Or since we try to get on at 950, we would have gotten in right on the tap and got the same entry, or you know, you would have gotten in a little later. That would have been the trade for that day. But yeah, I'm trying to just stick to these little macros. Let them, obviously this is, you know, Asian and London, but see how you can play this? Look at that, boom, 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 market maker sell, come back down. Let's see what we got the next day. UVXY calls tomorrow. I don't know, I don't really trade options anymore, and I haven't really watched UXVY. Sorry, I've not been paying attention to the chat. Someone said, what broker? I use Ninja Trader. Ninja Trader and Top Step for my funded account. UVXY is opposite of the stock market though. So if you think the stock market is going up tomorrow, then you should get UXVY puts. They're opposite of each other. I can look really quick. UVXY. Oh, not futures.